Welcome everyone to the new episode of Market Decoded by Phidias Propfirm with our guest as usual, Jay from Derivative Trading. We had a crazy week as you expected. We had a lot of volatility. We are going to talk about all of that. So obviously the dominant theme was Greenland and the tariff drama with the Davos meeting. We are going to cover all of this. So let's do a quick recap of what happened, Jay.
Yes, absolutely. We can make a recap. On Monday, Tuesday, market fell as geopolitical tensions rose around Trump's Greenland stance and threats of tariffs. Equity indices dropped about 1%. Luxury goods and German auto led losses. Demand for safe haven spiked with volatility. Gold climbed above 1,700. Franc strengthened and the dollar weakened. Japanese bonds stress began as Japanese government bond selling emerged because of Prime Minister Takaishi fiscal policy. On Wednesday, a political reversal in Greenland eased tensions. Trump stepped back and on threats, which calmed markets and triggered a broad rebound in equities, mainly in Europe and in USA with S&P, and also in Asia. Risk assets recovered, demand for safe haven eased, semiconductor started to rally on major headlines, and flow rotated into tech. Today, the move extended into Asia, markets hitting records, a strong flow into metals, gold approaching 5,000, silver near $100, and a rotation toward emerging markets. Bosch left policy unchanged but lifted inflation forecast, pushing Japanese government bonds futures lower than prompting a yen rebound after Governor Ueda signaled willingness to act with the government.
If you want to start trading futures without risking your own capital and get funded with the best trading conditions, join Phidias Propfirm by clicking the first link in the description below and use the code PPYT at checkout to get the best discount available. Let's get back to the market analysis. So indeed, a very full and impactful week. So maybe let's go over the precious metals. What's expected for the coming weeks?
Yeah, early this week, the metals rally was driven risk from US-Europe tensions, dollar softness, safe haven demand, and strong ETF and central bank flow. Today, Bosch signals and persistent macro uncertainties sustain buying. What could cap this momentum is if the rate expectation normalize higher. So for now, we could have a continuation of this momentum on gold.
Great. And what about the current trader's favorite, silver?
Yeah, same on silver. Yes, I told you that on silver, the market should calm down, but with geopolitical uncertainty, silver also enjoy this rally this week. But I should be particularly vigilant regarding silver. Better to stay on gold in the coming weeks than on silver. But for now, silver is rising like gold.
Okay, great. So as we spoke, we had the Bosch meeting. So maybe we can talk about the Forex and what can happen on the Forex market, what to look out for the coming weeks.
Yes, this is very important. Bosch kept rates unchanged but raised inflation forecasts that initially pressured Japanese government bonds, pressured by selling futures, then saw buyers and Japanese yen rebound after Ueda mentioned possible quick action with the government to stabilize markets. The backdrop, large rate differential if Fed stays higher, keep downward pressure on the Japanese yen. So authorities are signaling readiness to intervene if volatility or disorderly move persists. And they, just after today Ueda meeting, press conference, they intervene in the FX as we expected. And the Japanese yen made a strong rally this morning against both US dollar but also against several currencies.
Okay, so what could be the medium-term impact on the Forex market?
In the coming weeks, I think the Japanese yen is going to continue to intervene in FX. It is the first movement they have done right now in order to prevent the market from rising more and to advert to hedge funds that they are going to intervene. And they did it. And I think that we will see other intervention in the FX in the coming days and weeks.
Perfect, perfect. So let's go to commodities like oil and other energies. So what's the major events that can happen in the coming weeks with the geopolitical situation?
Yeah, Brent oil rose modestly to about $65 on a weaker dollar and improved risk sentiment through structural super risk persist with forecast of possible surplus. The market remains sensitive to geopolitical disruptions. We have also US natural gas, which jumped sharply due to cold snap and freeze off risks that is dominant in near term. And in the coming weeks, they are still sensitive to geopolitical development, mainly on oil around Iran and on natural gas, maybe if the weather is not so cold, we should see a sharp decline on natural gas.
Okay, very good. So I think we did cover most of the important assets. Maybe you want to touch on the stocks and indices. What can we expect with the FOMC meeting and all the next week's economic news?
Yeah, next week, watch bullish signals regarding FX and Japanese government bonds and any hint of coordination with the government, because I mentioned I think they are going to intervene again. About the Fed, yes, the market isn't expecting a rate cut this month, but we need to follow the Fed and see any signal for the futures cut. Also next week, we have end month and quarter options expiries next week, and negative gamma situation on indices right now can amplify moves. After Monday, Tuesday weakness, Wednesday political calming trigger risk on flow, as mentioned before. Buyers return to equity, notably in semiconductor and artificial intelligence. However, some CTAs remain cautious or modest seller in US equities, so the rally is flow dependent and could reverse around technical threshold. Weekly, monthly flow still show net selling in bearish phases, so liquidity and positioning matter. Also, we have the buyback opening windows next week, so we could have corporate buyback next week, but in the meantime, CTAs and systematics, vol control fund as seller.
Okay, so we'll be very cautious on the indices as it might be only a short-term rally. Okay, so do you want to add anything else for next week?
Keep an eye on volatility and on FX next week. I think we will see more volatility in the coming days.
Perfect. Let's now move to the most anticipated segment of the show, the Trader Pro Tip, as everyone loves it. So what do you have for us this week, Jay?
Yeah, for this week, as I mentioned, the natural gas, the NATI, for traders who know this market, it is interesting to trade the NATI, and you can try to start a mean reversion trade on the NATI. And if you understand all the techniques we can use an option to play both volatility and mean reversion strategies, time to learn options. You can in the future use futures spread strategies in order to start kind of mean reversion on natural gas.
Okay, great. And if you guys want to learn about options or how to do spread trading on futures, you can join Jay's course directly in the description below. We have the link for all his services. Okay, thank you very much, Jay, for this week's analysis and all your insights and tips. If you guys want to join Phidias, click the first link in the description below. Don't hesitate to like, subscribe, and let us know which instrument are you trading for next week, and let us know if you have any question. We'll answer them directly in the next episode. Don't hesitate to recommend the Market Decoded to your friends who needs to prepare their trading week. And I leave the last word to Jay as always.
My pleasure, always a pleasure to discuss, and keep an eye on FX next week and in the coming days. Have a good week.
All right, everyone, have a good trading week. Trade safely. We'll see you next Sunday. Ciao.